Welcome back, grade 11s. Now let's look at our first concept for the lesson, which is reasons why businesses need funding. Businesses require funding to run the business and have enough money to pay employees or suppliers of raw materials. So obviously, as a business, you are going to need money to pay your employees in terms of their salaries, in terms of their wages. So obviously, you're going to need money for that. And you're also going to need money to pay the suppliers who will be supplying a business with raw materials. Pay for the cost of inputs such as wages, telephone, and other expenses. Business requires money to pay for operational expenses such as our telephone, our water and electricity. So for those things, businesses need money to pay for them. We also require funding in a business to cover the start-up costs, including premises, machinery, and raw materials. So a business will need money to obviously pay for the land and building at which they are going to operate on when they start the business. Now, let's look at concept number 2, which is sources of funding. We have bank loans. Businesses may apply to borrow money from the bank. So a source of funding that we can actually look into as a business is to borrow money from the loan. Obviously, when we borrow money from the loan, we first need to apply, and then the bank is the one who's going to tell us that do we qualify or not, or how much money, how much loan do we qualify for as a business. And after that, we need to know that that money has to be brought back to the bank with an interest, obviously. The bank will check their credit worthiness before approving the loan. So before the bank can grant a business a loan, obviously they need to do the credit check, checking how do you pay your debtors as a business so that they cannot put themselves at the risk of giving you money as a business, knowing very well that you are not going to pay it back. You are a bad debtor. Then we have trade credit as another source of funding. Trade credit is an agreement between a business and a supplier. So when we talk of a trade credit, we are referring to the agreement between the supplier and the business in terms of paying back the supplier's money, whether you're going to pay on credit. If you are going to pay on credit, for how many months are they giving you allowance to pay back the money for the stock or the raw materials that you have bought from them. Then suppliers normally allow businesses between 1 to 3 months to settle their debts. So if we have a trade agreement with the suppliers, normally they give you 1 to 3 months to settle the debt that you have with them. So that is trade agreement. Now let's look at another source of funding, which is leasing and hire purchase. Businesses can lease certain assets such as equipment and technology, which is owned by another party. So obviously as a business, if you don't want to buy equipments for your business, you can actually lease them from other company, whereby there will be a lease agreement that they are borrowing you this particular machinery for this particular period of time that will be stated in the lease agreement. In the contract, the fixed amount or monthly premium must be specified. So obviously in the lease agreement, there must be a fixed amount that you are going to pay to the vendor, the person who has borrowed you the equipment or the machinery that you are using in a business. So with you paying that money does not actually mean that you will own the asset at the end. It still belongs to the owner. You are just hiring it in exchange of a monthly amount that you are going to agree upon with the person who will be borrowing you their equipments. Now, another source of funding is angel funding. Sometimes a wealthy entrepreneur offers financial help in exchange for a share in the business. Another source of funding is angel funding, whereby you would find a wealthy entrepreneur. They decide to give business money in order for them to have shares in a particular business. So that's another source of funding that you can look into if you want to start a business. This type of funding carries high risk for the investor. So the angel funding carries a high risk for the person who will be giving actually the business money, because if the business fails, then it simply means that the investor has lost their money. Then another source is issuing of shares. New companies can issue shares to obtain capital. So another way of getting funding in the business is by issuing shares. When we issue shares, obviously we allow the public to come and buy shares. In that way, in exchange for a share, a person will buy with the money, and that money we can use it as a capital in our business. Then shareholders receive a share certificate as proof of ownership. So the person or people who have bought shares, we call them shareholders. They will get a shareholder certificate that specifies the amount of shares that they have bought or the amount of shares that they are now owning in a business. Remember, they paid money, and that money in exchange of having shares in a business in order for the business to raise capital. It's another source of funding. Then we have bank overdraft. Businesses with a current check account can arrange a bank overdraft with their bank. So obviously, if you're a business and you're having a check account, you can arrange with your bank for a bank overdraft. The bank will set a limit on the amount that can be withdrawn from the account as the overdraft limit. So obviously, if you've applied for an overdraft, the bank is going to give you a limit that after withdrawal, maybe your account has no money, but you are still allowed to withdraw a certain amount of money and not more than that. That's the limit that will be set by the bank, provided that they approved the overdraft that they've given you. Then the business pays interest on the amount of money they withdraw and for the period they have withdrawn. So obviously, it's not just free of charge. You are going to pay interest on the money that you have overdrawn to the bank. That's how they are making money. So these are the sources of funding that you can consider when you want funding for your business. Now, let's just go for a quick ad break and we will be back.